Delete this video after watching, because what you're about to learn will flip everything you think you know about trading. Last Tuesday at 3:47 p.m., I watched a $2.3 million order get executed on Bitcoin. The interesting part? The trader who placed it lost money on purpose. Why? Because 7 minutes later, retail traders flooded in at the breakout. That same trader sold into their buying, banking $847,000 in pure profit. See, he wasn't trading Bitcoin, he was trading you. And once you see how this invisible chessboard really works, you can never unsee it. Welcome to Trading Psychology Stick, where we decode the hidden games that separate winners from everyone else. Quick disclaimer, this isn't financial advice. I'm sharing psychological frameworks that change how I see markets, your money, your decisions, your responsibility. Now, let's begin. Act 1, The Awakening. Chapter 1, most traders play checkers on a chessboard. There's a reason 93% of retail traders fail, and it has nothing to do with intelligence, or strategy, or time on screen. It's because they think they're playing checkers on a chessboard. In checkers, the goal is simple: move forward, capture, win. Each piece moves the same. The game is direct, linear, predictable, but trading isn't checkers, it's chess. And in chess, each piece has a different personality. Some attack, some defend, some sacrifice, some wait. Worse, the real moves don't happen on the board. They happen in the mind of the player. Most retail traders learn just enough to lose consistently. They memorize indicators like MACD and RSI. They chase clean chart patterns. They wait for confirmation. They react to candles. And then they wonder, why did the breakout fail? Why did it pump after I sold? Why is it always me? Here's the truth. You're not just playing against the market. You're playing against everyone inside it. Remember March 2020, when SPI hovered at 340 resistance for 3 days? Retail saw consolidation. Smart money saw distribution. The result? A 30% crash in 2 weeks while institutions bought the fear. That failed breakout? It was a trap. That sudden dump? It was liquidity harvesting. That clean setup? It was bait laid out for the next pawn. And the moment you saw the move, someone else saw you. In chess, beginners chase checks. Masters chase positioning. They think in arcs, traps, psychological pressure. In trading, beginners chase signals. Meta traders chase intention. Because price is never random. It's narrative made visible. It's emotion translated into ticks. The average retail trader holds positions for 3.2 days. Institutions, 67 days. One is playing checkers, the other is playing chess. And until you stop asking, what is price doing? And start asking, who wants me to think this? You will keep being moved like a piece instead of becoming the player that moves others. Every trade is a conversation between fear and conviction, between weak hands and strong hands, between you and someone betting against you. So, the real question is, are you thinking like a pawn, or are you ready to think like a predator? Because from here on out, we stop reacting to the board and start studying the mind of the one who set it up. But wait, if I'm not the only one on the board, who exactly am I playing against? And how can I beat someone I can't even see? Chapter 2, Who You're Really Playing Against. Here's what no one tells you about trading. The market is not your enemy. The people inside it are. Because behind every candle, every pump, every dump is a human or an algorithm with an agenda. And if you don't know who they are, you're already losing. Let's meet your real opponents. First, the retail herd. They're everywhere. Reddit threads, Discord groups, YouTube signals. They chase green, they panic at red, they buy after price rallies, they sell right before the bounce. They use the same tools, RSI, MACD, bull flags. They use the same language, to the moon, or rugged. And because they're predictable, they're hunted. Smart money doesn't fear retail. It feeds on them. Quick story. I once joined a trading Discord with 50,000 members. Every morning, the same pattern. Admin posts a setup. Within minutes, hundreds typing LFG and aped in. The chart always pumped poems by the time they posted. Guess who was selling to them? Second, the smart money. Funds, whales, institutions. They're not here to play fair. They don't trade for dopamine. They trade to win. They understand liquidity. They create the trap. then leave breadcrumbs for you to follow. They short when you go long. They dump when you're finally convinced to buy. They use tools you don't even know exist: block orders, dark pools, spoofing, narrative campaigns. And they're patient. They don't need to win this trade. They just need you to show your hand. Third, the algorithms. You can't see them, but they're everywhere. They don't feel. They don't guess. They don't sleep. They scalp volatility, front-run orders, sniff liquidity. They don't care about the why, only the pattern. Remember the flash crash of May 2010? The Dow dropped 1,000 points in minutes, not because of news, because algorithms detected selling, amplified it, creating a feedback loop. Real money made millions in the recovery. Retail got stopped out at the bottom. But algorithms are also predictable. They're good at what was. Meta traders focus on what's becoming. Fourth, the market makers. They're the house. They create the game. They need both buyers and sellers to make money. So they move price not to reflect value, but to manufacture imbalance. Their goal? Get enough traders leaning one way, then pull the rug. They don't chase you. They wait until you chase them. Now, here's the kicker. You'll never see these players directly. You'll never get a face. You'll never get a name. But you can see their footprints. Wick rejections where stop losses cluster. False breakouts before big news. Heavy volume in dead zones. Price moving with no liquidity beneath. Every trap leaves a trail. I tracked Bitcoin's movement around options expiry for 6 months. Every single time, price magnetized toward max pain. Coincidence? Or someone making sure the most options expired worthless? So, when you look at a chart, ask, who benefits if I buy here? Who's on the other side of this trade? Who wants me to see this setup? Because once you start asking those questions, you stop being the hunted and start becoming the hunter. But knowing your enemy is only half the battle. The real question is, why do you keep falling for the same traps over and over? Quick pause, take a breath. You know what's funny? My 8-year-old nephew watches me trade sometimes. Last week he asked, "Uncle, why does the green bar make you scared and the red bar make you happy?" Kids see everything backwards. Or maybe they see it exactly right. When everyone's euphoric, I get nervous. When everyone's panicking, I get interested. If an 8-year-old can see this, what's our excuse? All right, let's dive deeper. Chapter 3, The Pawn's Curse. Why predicting price fails. Pawns move forward. That's all they know. One square at a time. Linear, blind, predictable. They don't ask why. They just go. That's how most traders approach the market. They scan for setups. They look for signals. They want confirmation. They want to know, will price go up or down? But here's the truth. By the time you're asking that question, someone else has already answered it and is positioning to use your reaction as their entry. This is the pawn's curse. You see a green candle and think, I'm late. But maybe there's still time. You see a red candle and think, I knew it was a fake out. Let me jump out now. And with every move, you're not acting. You're reacting. You're not playing the market. You're playing your fears. Let me tell you about February 2021, GameStop. Everyone saw the squeeze. The headline screamed, democracy. Retail wins. But zoom out. Who provided the exit liquidity at 400? Who sold calls at 800 strike? The real winners weren't on Reddit. They were selling into the euphoria they helped create. Kings don't react. They prepare. They don't chase. They wait. They don't ask, is this the breakout? They ask, who's trapped here? And how can I profit when they panic? That's what a MetaTrader does. They think in layers, not just what the market is doing, but what other traders think it's doing, and what the smart money wants them to believe. Imagine 2 players, same chart, same setup, same candle. One sees a breakout, the other sees a liquidity grab. One buys, the other shorts. Guess who wins? The one who sees the game above the game. The one who realizes most breakouts aren't real. They're traps. Most pumps aren't organic. They're engineered. Most losses aren't bad luck. They're positioning misreads. So stop trying to predict price. Start predicting behavior. Ask, who's scared right now? Who's greedy? Who's stuck? Who needs to exit? And most importantly, who's being played and how can I be the one playing them? Because when you stop chasing price and start anticipating intention, you're no longer a pawn in someone else's strategy. You're a player, a predator, a kingmaker, and kings don't flinch. Take a moment here. Think about your last 3 losing trades, not the price action, the emotion you felt right before entering. Were you chasing or preparing? Comment below with one word that describes that feeling. I bet 80% of you will write the same thing. Chapter 4, Castles and Traps, How Smart Money Baits You. In chess, a fork is deadly. You make one move, and suddenly 2 of your pieces are under attack. No matter what you do, you lose something. In trading, smart money plays the same trick. They create forks, setups that look bullish to retail, but are designed to trap them. They move first, not to win the trade, but to make you commit. And when you do, they pull the trigger. This is the anatomy of a liquidity trap. A clean trend line gets broken. Volume spikes just enough to create FOMO. The crowd piles in with late longs, over-leveraged buys, then, like a guillotine, reversal, liquidations, panic, exit, and finally, the real move begins in the opposite direction. Sound familiar? Let me show you exactly how this played out with Tesla. In November 2021, price broke above 1,200, clean breakout, volume confirmation, Twitter exploded with new ATH incoming. What happened next? Immediate reversal to 900, $300 wiped in days. But here's what most missed. The day before the breakout, unusual options activity showed massive put buying. Someone knew. It wasn't a failed setup. It was a design trap. Why would smart money do this? Because they don't just need a direction. They need liquidity. For every buy, there must be a seller. But when everyone wants to buy at once, they can't enter without pushing price against themselves. So what do? They create sellers by baiting buyers first. They move price just enough to trigger your strategy. They use your rulebook against you. And they don't stop there. Sometimes they let price hover near key levels. They know traders are watching, waiting for confirmation. Then, a fake breakout, just enough to pull in retail. And once the herd commits, reversal. Just like a rook pinning your queen in chess, and you never saw it coming. The best part? They often lose money on the bait, but it's worth it, because the real profit comes from the liquidation wave you trigger. This is how they control tempo. They dictate when you act, not just what you do. It's not about price, it's about positioning. So, how do you avoid the trap? You stop looking at the setup and start reading the intention behind it. Ask, who benefits if this breaks out? Has liquidity built up above or below? Is this move aggressive or inviting? And most importantly, if I were smart money, would this be the perfect time to lure someone like me? When you ask that question, you switch from pawn to player. You stop following signals. You start decoding traps. And once you can do that, you're no longer reacting to the move. You're predicting the ambush. We've covered a lot. You now know who you're playing against. You understand why chasing price fails. You can spot the traps. But here's the thing. Sometimes the best move isn't a move at all. What if I told you that doing nothing could be your most powerful weapon? Asset 2, the Toolkit. Chapter 5, the King's Patience. Why doing nothing is doing something. In chess, beginners rush to attack. They throw out pieces. They chase early advantage. They want something to happen. But the Grandmaster waits. He builds. He watches. He lets his opponent make the first mistake. Because in high-level play, aggression isn't power. Patience is. Now, look at the markets. Everywhere, traders are pressing buttons, desperate to be in a trade, afraid to miss out, terrified of standing still. Because doing nothing feels like losing. But here's the truth. In trading, doing nothing is a decision, a strategic one, a powerful one. Warren Buffett held $128 billion in cash through 2021's bull run. The finance media mocked him. Lost touch, they said. Missing the greatest bull market ever. Then 2022 arrived. Markets crashed. Buffett deployed $68 billion at the bottom. Who's laughing now? The king in chess doesn't move early. He doesn't get baited into battle. He waits until the board is clear and the moment is right. The MetaTrader does the same. They don't chase every breakout. They don't fight chop. They don't enter out of boredom. They know most trades aren't worth taking. Most signals are noise. Most setups are unfinished stories. But here's the deeper truth. Waiting isn't just about discipline. It's about gathering intel. Every hour you wait, you're observing. Who's trapped? Where is liquidity pooling? How are the algos behaving today? What mood is the market in? Just like a grandmaster studying his opponent's breathing pattern, you study price action for the hidden hand behind the move. Sometimes the edge isn't in being early, it's in being the last to act, but the first to understand. Because when everyone else is stuck in chop, you're sitting in cash, waiting. And when they finally panic, when their stops hit, you step in like a ghost, not chasing the move, becoming the move. This is the art of passive pressure. You don't react, you don't flinch, you don't commit. You let them make the first error, then you make your move, cold, clean, and irreversible. And that's how kings win, not by force, but by presence, by silence that bends the board in their favor. So, the next time you feel itchy to click, pause, breathe, ask, am I entering because the opportunity is real, or because my emotions can't stand the silence? Because the strongest traders don't need to be in the market every day. They only need to strike when it matters. Pause this video for 10 seconds. Look at your screen right now. How many positions are you holding out of boredom versus conviction? Close the board ones. I'll wait. Chapter 6. Building your own board. The MetaTrader's Toolkit. At some point, the best players stop playing the game. They start playing themselves. In chess, this is when theory ends and intuition begins. You're no longer responding to openings. You're shaping the field, dictating tempo, forcing reactions. In trading, it's the same. After enough cycles, enough traps, enough losses that almost made sense, you stop asking, what is the market doing? And start asking, what can I build? So the market shows me exactly what I need to know. That's when you begin to construct your meta toolkit, not tools to tell you what price is doing, but tools that reveal what others believe, what others are trapped in, and what you should ignore. First, the sentiment scanner. You start tracking emotion, not price. Reddit chatter surging on a coin, Twitter threads pumping a breakout, Discords full of ape in now. You log it, you tag it, you mark when FOMO peaks, because that's often the top. I built a simple spreadsheet tracking social volume versus price on 10 assets. Within 3 months, I could predict tops within 5% just by measuring chatter intensity. When everyone's talking, nobody's left to buy. Second, the liquidity lens. You stop seeing candles. You start seeing where stops are. Where would a scared trader put their stop? Where would a confident but wrong trader enter? This tells you where price will hunt. Third, the narrative map. You no longer react to news. You map how news affects positioning. Ask, what's the dominant story right now? Who created that story? How long can it hold before collapsing? Remember the Fed pivot narrative of early 2023? For months, every dip was bought on pivot hope. Smart money distributed into every rally. When Powell finally said, higher for longer, retail was max long. The trap was complete. Because in the metagame, price doesn't follow reality. It follows narrative structure. Fourth, the strategy inventory. You track not just your trades, but your system's mood. When does this setup shine? When does it decay? Which regime kills it fastest? My breakout strategy printed money in trending markets. In choppy markets, it bled slowly. The strategy wasn't broken. I was using it in the wrong weather. Now I have 5 strategies, each tagged to specific market conditions. I only deploy what fits the current regime. Because every tool has a season, your job is to rotate edges, not marry them. Fifth, the no trade detector. Perhaps the most powerful tool of all. A red light, an alert. A bell that rings when you're about to enter out of emotion. It's the guardrail that whispers, this isn't your board today. My rule, if volatility is down 50% from the 20-day average and I'm bored, no trades. Period. This one rule saved me 6 figures last year. These tools don't tell you what to trade. They tell you when you're playing someone else's game and give you the power to stop playing. Because meta traders aren't just system builders. They're battlefield designers. They don't react to volatility. They create clarity through structure. They don't just see the board. They build one where they can't lose. Right now, grab a notebook. Write down 3 tools you'll build this week, not indicators. Meta tools that track emotion, narrative, or friction. Share your best idea in the comments. All right, we're halfway through. You still with me? Good. Let's do something different. I want you to think about the most painful trade you ever took, not the biggest loss, the one that hurt your soul. Got it. Now ask yourself, was it painful because of the money or because you knew better but did it anyway? That gap between knowing and doing, that's where the real game is played. Chapter 7. The Art of Inaction. When not trading is your sharpest edge, Let's say you flipped a coin 100 times, but you only bet when it landed on heads 3 times in a row. Statistically rare, but not impossible. Now imagine you only took action on those moments. How different would your results be? That's inaction as a strategy, not missing out, but filtering out the noise until the signal screams. Most traders overtrade because they confuse motion with mastery. They feel the urge to be in something at all times, as if being flat is failure, as if silence is loss. But in the metagame, this urge is a built-in trap, because the real game isn't can I win this trade, it's can I wait long enough until the board begs me to move. Let me share something painful. In 2019, I tracked every trade for a year. The result? My first trade each day averaged plus 3.2%. Every trade after? Minus 0.8%. I was literally trading myself from profit into loss. The market wasn't beating me. I was beating myself. In chess, grandmasters often spend 20 to 30 moves doing nothing flashy, just slight repositions, tiny edge accumulations. They wait. And then, one small blunder from the opponent, and the entire game collapses in their favor. Because they didn't rush. They didn't need to. They were playing positional chess. In trading, the meta player acts the same way. They sit in cash when there's no clear bias. They skip days when volatility is fake. They watch others burn and chop. They know their setup will return, and when it does, they pounce like a ghost. It's not discipline. It's knowing the cost of action when your edge is low. Why we struggle with inaction. Ego wants to do. Stillness feels weak. The market becomes a test of identity. Dopamine addiction, the click, the fill, the candle rush, you crave it even if it hurts you. FOMO, someone else is printing, you're not, so you force it. But this is the mindset of the pawn, always moving forward, even if it's into death. The meta player waits for transcendence. Here are tactical tools for mastering inaction. Setup scorecard. Only act if your trade scores 4 out of 5 on key conditions. Volatility, narrative alignment, liquidity clarity, sentiment match, technical confluence. Less than 4, pass. Market mood journal. Each morning, write 3 words. How does the market feel? Trappy, clean, nervous, exhausted, energized? If 2 of 3 words are negative, smaller size or no trades. Self-mirror. Check before clicking anything, ask, would I still take this trade if nobody knew I did it? This kills ego trades instantly. Inaction is not passive, it's strategic stillness. You're observing the board, you're watching the players, you're letting others overextend, so you can collect what they leave behind. Just like in chess. A pawn becomes powerful only after waiting, and choosing the right path forward. Let others die in the noise. You wait for signals so strong, it echoes through silence. Here's your challenge. For the next 5 trading days, take only 1 trade per day. Your best setup, nothing more. Track the difference. Post your results with W 1 Trade Challenge. I guarantee you'll be shocked by what patience produces. Chapter 8. Weaponized Risk. How meta traders use fear as leverage. Most traders treat risk like a fire alarm, something to run from, to avoid, to suppress with tighter stops, smaller size, or hope. But in the metagame, risk isn't just something you survive. It's something you shape, and if used well, it becomes your strongest weapon. Because risk isn't just exposure to loss. It's a lens that reveals intention, pressure, and edge. A grandmaster in chess doesn't flinch when threatened. He evaluates. Is the threat real or a bluff? Does it open a door or close a trap? He doesn't run, he repositions. Sacrifices a pawn to unlock the endgame. Trades tension for tempo. Uses pressure as a message. You'll need to show your hand before I do. Now apply that to trading. March 2023. Bank failures. Credit Suisse collapsing. Everyone screaming 2008 again. VIX hit 30. Most traders hid. But if you studied the actual mechanics, Fed backstopping everything, liquidity incoming, the best long setup in months disguised as disaster. The crowd sizes down when volatility spikes. Meta traders sharpen their position, sizing rules. The crowd exits early to lock in green. Meta traders trail with logic, not fear. The crowd avoids risk. Meta traders calibrate it. Because to play this game forever, you need to master risk as a state of mind, not just a number in your spreadsheet. Three dimensions of risk the MetaTrader uses. First, risk as a thermometer. Before entering any trade, ask, is this my risk or someone else's panic? If you're acting to avoid pain, you're late. If you're acting because others are in pain, you're early. The best trades often feel wrong, because that's where everyone else is uncomfortable, and the reward is high because fear is peaking. Second, risk as a filter. Not every setup deserves your capital. Not every candle is your job. Use risk as a spotlight. High narrative clarity plus low liquidity equals go. Low narrative plus crowd euphoria equals stop. If the trade feels too safe, it's probably already crowded, and crowded trades aren't profitable. They're explosive, just not in your favor. Third, risk as a weapon. You don't need to trade more. You need to bet heavier when the board is tilted. But here's the catch. That requires not trading when it's flat. Discipline isn't just about safety, it's about saving ammunition for when your opponent overextends. That's when you strike, not emotionally, but deliberately. Because concentrated risk at the right moment is what separates noise from legacy. Paul Tudor Jones didn't become legendary by taking small risks daily. He became legendary by betting huge when the setup screamed. Most days, he did nothing, but when he moved, markets remembered. Practical tools for risk mastery, conviction. Sizing grid, assign position size based on a score. 0 to 5 across clarity, volatility, narrative, sentiment, and liquidity. Score below 20, pass, score above 20, scale accordingly. Friction journal, record moments where your system breaks down emotionally. Early exits, revenge entries, paper cuts. Pattern recognition of your weaknesses is risk management. One bullet rule, only allow one trade per thesis. No retry. If you miss it, journal it. Don't chase it. This kills FOMO and forces quality over quantity. The trader with the biggest account isn't always the best, but the trader who can apply risk when others hesitate and pull risk when others chase, that's the one who becomes anti-fragile. The one who doesn't just survive storms, but grows because of them, just like the king in chess. He doesn't need to move often. He just needs to make every square react to him. So far, we've built tools, mastered patience, and weaponized risk. But what happens when the entire game changes overnight? When every rule you've learned becomes obsolete? Act 3, the evolution. Chapter 9, the meta shift. When the rules change mid-game. Most traders don't lose because they're stupid. They lose because what used to work stopped, and they didn't notice. They kept playing yesterday's game, in today's market, using old rules in a new war. In chess, this would be like sticking to your favorite opening even as your opponent sacrifices everything to blitz your king. But in trading, it's more subtle, because the board still looks familiar, the candles still form patterns, the indicators still flash signals, but none of them matter anymore. Why? Because the metagame shifted, and you didn't shift with it. What is a meta shift? It's when the invisible logic of the market changes, even though the charts don't say it out loud. Volatility drops, liquidity dries up, narratives die, crowd reflexes invert. Suddenly, breakouts no longer follow through, dips no longer bounce, high beta names stop reacting to news, leaders become laggards, and if you're still playing the old playbook, you're now the one being played. Look at crypto's evolution. 2017 was ICO mania, buy anything with a white paper, then it died. 2020 brought DeFi summer, yield farming printed money, until it didn't. 2021, NFT fever, profile pictures worth millions, then silence. 2024, meme coins. Each time, the early players made fortunes. The late players held bags. The difference? Recognizing when the music stopped. Why do meta shifts happen? Because markets are reflexive ecosystems. Too many traders exploit the same edge. That edge gets crowded. It stops working. New edges emerge. This is why edges degrade. Not because they were bad, but because everyone found them. Remember buy the dip from 2020 to 2021? It worked every single time. Until 2022, when every dip became a cliff. Same setup, different regime, opposite outcome. The metagame punishes the obvious and rewards the adaptive. How to survive and win meta shifts. First, zoom out often. Stop being hypnotized by the 5-minute chart. Ask, what are the big players repositioning into? Second, map crowd behavior. Are breakout traders still confident, or are they slowly disappearing? Third, Journal friction. Are your best setups suddenly failing more often? Are you getting chopped where you used to dominate? That's not bad luck. That's friction. The signal that the terrain has shifted. Fourth, run meta diagnostics weekly. Ask, what's working right now? What's failing? What changed in the last 2 weeks that most people haven't processed yet? Because meta shifts don't scream, they whisper. In chess, when your opponent stops developing pieces and starts sacrificing pawns to open your king's file, you adapt or you die. In trading, when your setups stall and your risk to reward compresses, you adapt or the market removes you. The goal isn't to find a forever strategy. It's to become a forever learner. Don't worship the system. Worship the ability to evolve. Because in the metagame, the greatest skill isn't entry timing. It's knowing when the whole game just changed. Chapter 10. Detecting the Regime Shift. OOB. How to see a market change before it tells you. The most dangerous market isn't a bear market. It's a changing market. One that still looks like what you know, but acts like something else. Where your best setups stop working, your stop placements start bleeding, your intuition gets foggy. And the more you try to force clarity, the more the game slips out from under you. That's a regime shift, a structural, behavioral, and psychological rotation in the market's mood. And if you can't feel it early, you're not trading. You're playing an old game on a new board. What is a regime shift? It's when volatility contracts or explodes. Liquidity moves from high time frame participants to low time frame traders. Narratives expire. Volume changes hands from strong to weak, or vice versa. The market's personality mutates. It's not always visible on indicators. It's emotional, rhythmic, subtle, like a player who once defended with caution, now starts sacrificing pieces out of desperation. December 2021 to January 2022. Best example I've ever seen. Same charts, same patterns. But suddenly, every bounce got sold. Every support cracked. BTFD became STFR, sell the rip. The indicators didn't change. The participants did. Risk on became risk off. And if you kept buying dips in January like you did in November, you got destroyed. Why do regime shifts happen? Because the metagame is reflexive. Too many players lean into one strategy. The edge decays, liquidity dries, a new dominant behavior emerges. Just like in chess, you overuse a particular opening. Opponents study it. It becomes easy to punish. Now you're forced to adapt or be dismantled. Same in trading. Buy the dip becomes fade the rally. Breakout becomes trap. Risk on becomes don't touch anything. The players changed, the crowd psychology changed. And if you didn't notice, you're now food for those who did. How do you detect a regime shift before the crowd? First, feel friction early. If your go-to setup starts failing not once, but consistently, without clear external cause, that's not bad luck. That's a tactical decay of edge. Mark it, track it, respect it. Second, watch participation. Are big players active or quiet? Are wicks cleaner or nastier? Do moves follow through or stall instantly? The character of who's playing has changed, so must your expectations. Third, measure emotional intensity. How hard is the crowd leaning on one side? If everyone's short, expect rips. If everyone's euphoric, expect exits. If everyone's quiet, prepare for surprise. I use a simple metric, Twitter sentiment plus put-call ratio plus VIX level. When all three align extremely, regime shift incoming within 2 weeks. It's hit 8 out of 10 times. Fourth, check narrative lifespan. In stable regimes, narratives last weeks. In shifting regimes, they barely last days. When even good news gets sold off or bad news causes no panic, you're in transition. What do you do in a regime shift? You tighten, you slow down, you observe. You test with small risk, wide eyes, and zero ego. This is not my board right now. Let me figure out who's playing before I pick a side. This is the difference between the losing trader and the meta trader. The loser blames the market. The meta trader watches the wind and repositions his sail. Because in chess, the storm doesn't announce itself. But the best players, they feel the tremor. They spot the pattern fracture. They adjust their entire game before the collapse comes. But what if your opponent isn't human? What if the metagame is being shaped by code? Machines with no emotion, no hesitation, and no need for rest. Then the question becomes, How do you outplay something that never blinks? Before we dive into algorithms, let me share something I've never talked about publicly. March 2022. I'd been trading for 7 years, built a solid 6-figure account, felt invincible. Then I met the machines. In 1 week, every single setup I touched got front run. Entry, instant wick against me. Stop loss, tag to the penny. Exit, price exploded minutes later. I lost $180,000, not to the market, to something I couldn't see, couldn't understand, couldn't fight. That week broke me, but it also taught me the most valuable lesson of my career. You don't beat the machines by being faster. You beat them by being human. Let me show you how. Chapter 11. Against the machines. Outplaying an opponent that never blinks. Some traders fear volatility. Others fear missing out. But the most dangerous fear today? The fear of becoming obsolete. Because the modern metagame isn't just crowded, it's automated. You're no longer just playing against retail, whales, or funds. You're playing against algorithms, entities that don't sleep, don't feel, don't second guess. They scan thousands of markets, make millions of micro decisions. They front-run liquidity, exploit latency, react to news in milliseconds. And here you are, human, emotional, and delayed. So, what chance do you really have? More than you think, but only if you stop trying to beat machines at their game and start playing a game they can't see. What algos do best? Speed execution. They exploit inefficiencies faster than you can blink. Scalping volatility through high-frequency trades, arbitrage, flash spikes, liquidity hunts programmed to target obvious stop zones. Not out of malice, but because that's where the meat is. Reaction-based execution responding to what has happened, not what's about to. But here's the truth. They lack context. They lack story. They don't know what traders believe, what fear feels like, what silence suggests. They follow patterns. You follow intention. And that's your edge. May 6, 2010. The flash crash. Dow dropped 1,000 points in 36 minutes. Algos detected selling, amplified it, created a death spiral. But here's what most don't know. Human traders who stayed calm and bought the crash made fortunes. The machines created the opportunity. Humans with context harvested it. How meta traders beat the machine. First, play the human game. Algorithms excel in straight lines, but they fall apart in irrationality. When sentiment flips violently, when memes drive inflows, when a narrative spirals before the code catches it, that's your window. They can't feel why the market moved, only that it did. You don't front-run price, you front-run belief. Second, trade time frames they can't dominate. High-frequency bots live on the tick and 1-minute charts, but they're often clueless on the 4-hour, daily, and weekly narrative arcs. You operate where stories unfold slowly, where patience creates positioning, and execution is less about speed, more about clarity. Third, predict the predictable. Most algos are coded with basic logic. Breakout equals buy. Stop cluster equals sweep. Mean reversion equals fade. Once you spot this behavior, you can anticipate it. Let them trigger stops. Wait for them to exhaust. Enter on the human flush that follows. Fourth, master the meta noise filter. Algos amplify false signals. They cause fake breakouts. They spike candles on thin liquidity. They crowd the same setups. So the MetaTrader adds new filters. Is the volume real or manufactured? Is the move supported by sentiment? Are the wicks violence or just noise? I learned this the hard way. Used to trade every breakout. Win rate, 30%. Then I added one rule. Wait 15 minutes after any explosive move. Let the algos finish their game. My win rate jumped to 65%. Same setup. Different timing. Massive difference. Your tools against machines. Wick tracking. Heavy wicks in both directions equal algo warfare. Stand aside. Reaction. Windows. Time. How long it takes for price to move after a key event. If it's instant, bots are controlling it. If there's a delay, emotion is present. That's your entry zone. Story versus speed analysis. Does the move make sense in narrative context? Or is it just a mechanical flush? You don't outclick a bot. You outweight it, outthink it, outfeel it. Because when markets become mechanical, emotion becomes a rare commodity. And when emotion becomes rare, it becomes valuable. The algorithm plays the chart. You play the crowd watching it. And that's how the grandmaster wins. Not by being faster, but by seeing what the machine can't calculate. But even if you outplay the machines, you still face one final opponent, the trickiest of them all, the only one who knows all your habits, fears, and blind spots, your own mind. And if you can't master that, you'll sabotage everything. Chapter 12, The Final Opponent. Mastering the mind behind the move. By now, you've outweighted retail, outread funds, outmaneuvered narratives, outlasted regime shifts, even outplayed the machines. But there's one final battle left, and it's the one most traders never win. The opponent who knows your every weakness, who whispers during every loss, and shouts during every win, who doesn't just influence your strategy, but becomes your strategy when you're not paying attention. It's you, because no matter how advanced your system is, how deep your metagame insight runs, if you're still controlled by fear, ego, revenge, or doubt, the market doesn't have to beat you. You'll do it yourself. The meta loop of self-sabotage. You start with clarity. A small win inflates confidence. You size up, break rules, get sloppy. You lose not just money, but identity. Now you have to win it back. You chase, you tilt, you spiral. Sound familiar? This isn't a bad streak. It's an emotional pattern pretending to be strategy. True story, March 2022. I'd made $47,000 in 2 weeks shorting the bounce, felt invincible, decided to press my luck, sized up 3x on the next trade, no stop. I understand this market, I told myself. Lost $62,000 in 3 hours. Not because the analysis was wrong, because I'd stopped trading the market and started trading my ego. The market didn't beat me, I beat myself. In chess, a grandmaster doesn't just study tactics. He studies self-regulation. He tracks when emotion creeps into his hands. He senses when his thoughts turn from intention to insecurity. In trading, you need to do the same. Because the difference between a 10K month and a blown account is almost never the market. It's how you responded to yourself when pressure showed up. The MetaTrader's inner framework. First, emotional risk management. Position sizing isn't just about capital. It's about your capacity to hold uncertainty without collapsing. Ask, how much uncertainty can I psychologically carry before I self-destruct? That's your true size limit. Second, ego as a hidden position. Every time you enter with a need to be right, you're already holding risk even before your first dollar. Track it, tag it, journal it. Let your ego speak out loud so it doesn't whisper mid-trade and hijack your exit plan. Third, meta-journaling beyond P&L. Stop recording wins and losses. Start recording. What version of me entered this trade? Was I hunting clarity or redemption? Did I wait, or did I need to feel active? Because who you were before the trade is the best predictor of what happened after. Fourth, the pause ritual. Before any high conviction move, ask, what emotion is most active in me right now? If this trade goes against me, will I still feel centered? If not, don't trade the chart. Trade yourself first. My pre-trade ritual, 3 deep breaths. Name the emotion I'm feeling. Rate my revenge urge 1 to 10. If it's above 3, no trade. This simple practice saved my account multiple times. In the metagame, the final boss isn't volatility. It's the silent script you run in your own mind, the beliefs about success, the buried need to prove something, the fear of stillness, the addiction to doing instead of waiting. You are the only opponent with unlimited access to your strategy, and the only one who can take it all down from the inside. But when you see this clearly, when you can sit across from your mind and say, I see what you're doing, and I don't need to follow anymore, that's when you stop playing checkers. That's when you stop playing chess. That's when you become the board. So, what happens now? After you've seen every layer, fought every enemy, faced yourself, the answer is simple. Now, you must choose the kind of player you'll become. The final chapter isn't about edge. It's about identity, and how to play the long game when the game never ends. Chapter 13, Becoming the Board. Playing the game that never ends. This is where most stories end. The hero defeats his enemies, survives the trials, finds the truth. Roll credits. But in trading, there are no credits, no final boss, no moment where the game stops and someone hands you a crown. Because this game, it never ends. The market evolves, the players rotate, the narratives mutate, and every edge you've built, every insight you've fought for, will be tested again, in new disguise. The only constant? You. The mind you bring to the board, the rhythm you play with, the self you choose to become. At this point, you've learned to see through false setups, anticipate narratives before they explode, detect regime shifts before they're obvious, use risk like a scalpel, not a shield, trade other people's psychology, not just price, and tame your own mind when it starts to turn against you. You no longer ask, is this a good trade? You ask, who's trapped? What's the dominant emotion? What story is being told? And when will that story break? This is meta trading mastery, but it's not the end. It's just the beginning of a different kind of journey, a journey of inner architecture, of building a mindset so resilient, so adaptive, so fluid, that even when the game changes again, you don't just adjust, you welcome it. So, what does it mean to become the board? It means you stop seeking perfect setups. You start creating asymmetric conditions. You stop reacting to the market. You start shaping how the market reacts to you. Your presence bends liquidity. Your execution leaves footprints. Your restraint causes curiosity. There's a trader I know, never tweets, never shows P&L. But when he enters a position, the market feels it, not because of size, because of timing. He's learned to enter at the exact moment when others are most uncertain. His trades don't just profit, they resolve tension. He's become gravity in his markets. You become a meta shaper, a trader whose moves influence the decisions of others, not through tweets or ego, but through pure, silent mastery. The long game of the metamaster. First, think in decades, not days. You're not here to make $1,000 today. You're here to build decision-making capital that compounds over years. Second, detach from outcomes, attach to process. You no longer care if a trade wins. You care if it was well played, well positioned, executed with clarity. Third, teach through action. You don't need a signal group. You don't need to prove anything. Your trades teach silently. Your equity curve whispers, this is what patience looks like. This is what real timing feels like. Fourth, stay curious forever. Meta traders don't become masters by arriving. They become masters by staying students of the unseen. The moment you think you figured it out is the moment the market turns you into the pawn again. So you journal, you reflect. You remain a student of behavior, energy, tempo, and self. And in time, you'll look back and realize you stopped playing chess. You became the quiet force behind the board, not the pawn, not the king, not even the hand moving the pieces. You became the terrain others must cross, the invisible shape they feel but can't see, the gravity beneath the game. The metagame isn't something you win, it's something you become fluent in. And in that fluency, you don't just trade better, you think better, decide better, live better. Because when you master the hidden game, you stop needing to prove you're a player and start becoming the board others learn to respect. Welcome to the other side of the chessboard, the game beneath the game, the place where patience is power, stillness is strength, and the greatest trades are often the ones you never take. Now you see it, now you can never unsee it. The real game has just begun. If you made it this far, you're different. You're not looking for quick wins. You're building something deeper. Your next move is simple but not easy. Open your journal right now. Write down 3 things. First, the last time you got trapped. What emotional state were you in? Second, one pattern from this video that explains your biggest loss. Third, which chapter hit you the hardest and why? Post your answer below using MetaTrader Awakening, not for me, for you. Because awareness is the first move on the new board. And if this shifted how you see markets, share it with one trader who needs to hear it, not the whole world. Just one person who's still playing checkers on a chessboard. Remember, the metagame rewards the patient, punishes the obvious, and transforms those who see beyond the candles. Welcome to the other side. The board is yours now.